Hey, it's Ryan from the Option Income Advisor, and today's trade analysis focus on Activision Blizzard. So this is one of the stocks that we recently highlighted on, if you saw our video on oversold stocks. This is one of those from that list. So a stock that has pulled back quite a bit. There's a lot of kind of news and reasons why the stock has pulled back. So we'll kind of walk through some of those things. And then also walk through valuation. I'll kind of show you why, I think, this stock certainly could pop from here and certainly be a good investment for the next, 6 to 12 months. I think it's one of those stocks that has, a lot of upside if we can get comfortable with kind of where it's trading at and, some of the catalysts that I think could propel it forward. So this is one of the largest video game manufacturers. So we had, a nice run into, with the COVID and the pandemic. So I can just get right in the chart here because it's easier to discuss that in the chart. So you can kind of see, this is COVID trough here, and you can just kind of see where this stock has gone. It's always been a little bit more on the volatile side just because of as video games come out and the timing of those games and the success of those games and reviews and all that kind of stuff that comes out, with these games, I think, you get some volatility there. But you can see for the most part, this stock ran up and peaked, right around all the time, not only that tech stocks were peaking, but also I think kind of pandemic related stocks were peaking. And so we'll get into earnings here, in a minute as well. This company did very well from an earnings perspective during the pandemic, as you would expect. But it's also one of those stocks that I think is going to have extreme relevance going forward as well, right? So there's been all this talk in the last couple of months about, the Metaverse, as soon as Facebook changed their name to Meta. There's all this focus on this virtual metaverse that's out there. Now, video games are going to have a huge impact and a huge part in that. And so I think, ATVI, Activision Blizzard is going to, participate in that significantly. So you can see where it peaked. That's when most tech stocks peaked. And then we got, we've talked about a lot of tech stocks recently, but we kind of got that interest rate scare sell off with some of the tech companies. But this one in particular, it started, kind of consolidating here, but then right around here, and if you're not familiar with this company, it's had some issues with its CEO as far as workplace misconduct and discrimination and things like that. So there's been an ongoing, so this was the state of California where they're headquartered, had kind of issued an investigation into some of the workplace practices, and so the stock really started tanking from there. You can see it went down quite a bit there, and tried to consolidate a little bit and bounced around. And then we got into kind of earnings. I think this was more of some issues with the CEO. So where we're at now is that the stock has come off, roughly 40% from its peak. And so knowing kind of what the reasoning behind it is, right, and not that I condone any of it or have an opinion on that per se, I'm looking at this from a company perspective. And is the underlying company solid enough to where I think that it can move on from here, right? And so the kind of current status of the CEO is a little bit up in the air, but you've already had companies like, and their customers, right, Sony and Microsoft and some of the game console manufacturers are putting pressure on the board to get rid of the CEO. So that's kind of an ongoing discussion. I think as more pressure comes on them from the game console manufacturers, then we may see the CEO leave. I think that would be a huge catalyst for the stock to pop in the short term. If the game console manufacturers somehow get comfortable with the CEO being there, I think, again, from an investment standpoint, I think you have to look at it and say, okay, well, if those customers aren't leaving, then maybe it's not as bad as they think, or the company can certainly move forward from here. And so it's really about just figuring out when can this company move forward, because it's got a phenomenal just just portfolio of games. You've probably heard of World of Warcraft, Call of Duty, Candy Crush, just a great portfolio of games, again, that I think are going to be extremely relevant going forward, in a bunch of new games kind of in the mix. And so right here is when they reported earnings. So they reported one of their main games was getting pushed off past the Christmas season. So that was a big, almost another huge downshot. After the stock had already gotten just killed for some of the CEO related stuff. And so the thing with these type of stocks though is that when earnings get pushed off, you can definitely wrap your head around why the earnings are getting pushed off, right? Because when a game is pushed off and the timing of that's pushed off, then it just means the earnings are pushed off. And so it's not that the earnings are going away; it's just that they're getting pushed off into a future into a future quarter. And so that's kind of what's happening here. So, I mean, if we're looking at just for perspective, this is trading right now, at $62, is trading right around 16 times forward earnings. So I just want to put this in perspective in this chart. When this thing troughed way down here, back in 2019 around the $44 level, it was actually trading around 20 times forward earnings. It was trading about 16 times trailing and then about 20 times forward. So from that perspective, this trough in the stock, right around this, call it 15 to 20 times earnings level, is kind of right where it's trading now. So that's why I think it could consolidate in this level. And again, I think there's big catalysts for this stock popping. If something happens with the CEO and he leaves, I mean, this stock's probably going to go to 70 or above immediately. So I like that, initial catalyst, and I want to get in before that, right? I think the worst has been priced in as far as what the CEO has done and kind of, I think the impact it's had on, morale and it's probably why that game got pushed off, to be honest with you. And so I think the worst has probably been priced into the stock from that perspective. And so, I want to get in before, this company starts, turning it around and hopefully gets, a proper CEO in there that can kind of move the company forward, because it does have a phenomenal kind of core business. So that's where I'm looking at from just a valuation perspective. So now let's get into the stock profile a little bit, because this one has awesome ratings, and you can just see why I like this stock, even given what's going on. And so, from a dividend safety value perspective, it doesn't pay a high dividend. It's only about 1%, but it has been increasing its dividend at a really high growth rate, and it's got, low payout ratio. So there's plenty of room. This company generates a ton of cash. And in fact, from a safety perspective, and we'll look at, some of the historical operating history, but it's got like $10 billion of cash on the balance sheet. So you think about it. So at the current market cap, right around $50 billion, 20% of that stock price, 20% of this stock price is actually in cash on the balance sheet, right? That's a pretty high percentage of cash making up their stock price. So I think that's extremely attractive just from a valuation perspective, seeing that, $10 billion of cash on a $48 billion market cap company. And then, from a valuation standpoint, again, we kind of looked at that as well. But let me just show you some of the details there. So we're trading at, like I said, not dissimilar from where it was when it troughed, back in 2019. So we're right around 16 times forward earnings. So historically, these video game manufacturers trade in like the 30 to 40 times. Right now, again, this is, I think, trading at a very, very low attractive level at this point. And, again, we've talked a lot about just multiple expansion, because that's really what needs to happen. Like the market needs to adjust its valuation multiple on this stock from where it's at now at a kind of trough level up to kind of a more reasonable level, right? And so we always kind of talk about, earnings from that perspective. So if we look at 2022 earnings, they are projected kind of almost to be flat, which is kind of impressive that this company can hold earnings flat from this kind of pandemic related peak. And we've looked at a lot of these companies that have kind of peaked during the pandemic, and then you're kind of trying to figure out where trough earnings are. Well, we're looking at a situation here where earnings have certainly peaked, but they're able to hold it flat and then grow from there, and that's kind of what they're projecting to do. And I think that had they been able to get the timing of that game out, I think they probably would have actually grown earnings a little bit in 2022. But now, after they've adjusted those earnings, we're looking at kind of flat earnings right around the 383 level. Okay, and that's for 2022. And then if we're looking at from a 2023 perspective, we're looking at 456. So by 2023, they're expecting to actually grow about 20%. So that I love seeing that from that perspective, where you've got this pandemic related earnings shooting up. We're flattening out here in 2022, but then we're growing again in 2023. So this was $4 and roughly 50 cents. Okay. So now, if we're looking at this from a just valuation standpoint, we talk about this multiple expansion stuff all the time. So if we're looking at this 383 level, and we just get up to say, I would say 20 to 25 times, earnings, and we're looking at that 383. So again, this is on forward earnings basis. There's nothing to say that this company can't trade at a 20 to 25 times multiple. It actually has historically traded much higher than that multiple. So this range of 20 to 22 gets you around $77 per share, or at the high end, we're looking around $96 per share. And so the consensus estimate right now, and we've had a bunch of downgrades because of the CEO stuff going on. So we've already had, some of these analysts downgrade. But as they're downgrading the company and lowering their price targets are still actually relatively high. So the consensus price target right now is right around $96. So you can tell they agree with probably this level of, say, 25 times earnings on a forward basis. And that gets you to, even at the low end, we're talking about 23% upside from here. And then if we get up to that 25 times multiple, we're looking at about 54 times. So we have some significant upside here with this stock, I think, with just a little bit of multiple expansion. How do we get to multiple expansion? I think we just get rid of some of this uncertainty. So that's why I think that if we get some data out there that says the game console manufacturers are somehow getting comfortable with the CEO, right? I mean, they're closer to the situation than we are as the public and social media, right? So, I would trust that more than anything you read. But if they're pushing for him to get out, I promise you that the board will kick him out, right? So that's kind of where we're at from this perspective. But I think you want to get in before that, because I think that's a huge catalyst for this to pop and get that multiple expansion that we're kind of expecting there. And so I think there is some good upside. From a cash secured put standpoint, we always look at that as well. So if you're interested in this company, or if you already own some shares of this business, and you want to maybe hedge your bet a little bit by selling some puts at a lower price, generate some income, maybe pick some up at a lower price if it does in fact drop a little bit from here. So I would actually look at, again, our strike zones, I think like roughly 50 to 55 on this one. So, I would look somewhere in this strike zone here. And these are all delta options below, or options with deltas below 25, which is attractive. I mean, I would do this 57.5 all day, right? At 2.1% average monthly yield, which is, 1.7% over 25 days. So this is the December monthly option here. This gives you about 8% of additional downside. Again, I think it's, from a valuation perspective, I really think it's probably troughing out of where it's going to be from here right now. Or you could do this 55, I think would be great. 1.1% over 25 days. Get you an average monthly yield of 1.3, and then you get about 12% of margin of safety there. So this would be if you're a little more concerned about maybe the market trading lower, or this stock in particular trading a little bit lower. But I think you do want to get in before we get some of this positive catalyst news, because I think the worst has been priced into this stock. And this is not a bad way to kind of hedge it. If you already own the stock, and give yourself a little bit of room, because it is a very nice premium yield. Or if you're just managing your portfolio and you just are looking for some great cash secured puts, you don't really care about the upside. You're more interested in this risk reward on the option side, which is great as well. This is a phenomenal cash secured put trade from that perspective. So that's the trade. Again, not condoning what's going on with the CEO, but I think you got to kind of look past that and kind of see where this company is going to come out of this, and I think you want to get in before that. So that's our trade. Take care.